Good morning. Looks like we got a bounce going here, at least. It started with the transports, which was where a lot of the damage was done. It's an amazing drop, actually, in a short amount of time. So, which would suggest, I mean, we talked about this, some bad ways coming in this economy. I mean, with the stocks that fell off related to that, and transports being a main sector of it, to fall off this far, this fast. So one of the things to watch for, well, there was a few things that we always watch for, but as far as long-term trouble for the markets, the transports could be one, but there isn't an inverted yield curve. It's actually improved. So the combination of those two has always led to recession and a big bear market. So we don't have the combination yet. And whenever we look at market internal gauges, it's about a combination of those gauges to point us in the right direction and a bias. So at this point, our shorter term internal gauges, which we looked at yesterday, are at an extreme, saying that, hey, a short-term bottom here is we're in the area. It never gives you a pinpoint accurate place. So prices are down into an area of support. When you see support, the assumption is that buyers are going to show up there. However, without the internals lined up, historically, those lows fail until the internals lined up. So right now, we have the internals lined up and the areas of support lined up. So let's look at some of the others. Spiders are actually bouncing pretty nicely here, but into the initial overhead resistance. So this would not be a place to consider buying. We don't buy at resistance, we buy at support. So looking for some type of a retest today or a sideways consolidation at this area. So if it gaps up, you're not going to see it on the daily chart. We'll be looking at intraday charts. But to go sideways in this area, 15 minutes, 20 minutes, that would be a bullish sign to look for prices to go up. If prices go down and retest, I would actually prefer that, just because retest and buying near support versus buying breakouts in a downtrend have much greater odds. Breakouts and downtrends tend to fail. They're not high probability setups. It could work because of the extreme move already, but just broadly speaking, buying at support in a downtrend looking for bounces will work the vast majority of times for short-term profits. So we'll see how that shapes up. So this area here, right, on the spiders, just look at it as in an area. We're in the area. Good sign. Down a whole bunch. It even went beyond the measured move that we spoke about earlier in the week. So, this move has been pretty extreme in a short amount of time. It's overcooked, so to speak, and some type of a bounce. Seems like a no-brainer. What it does here this morning as it's testing this resistance, we'll see how that plays out. As I'm saying, Tony, proving bullish first. Yes, I wouldn't just buy this unless you have the intention to scaling in. So finding the place, right, so to speak, can be a little difficult. And sometimes waiting for what we believe is the place for us doesn't always play out that way. So from an intermediate term perspective, with the internals as they are, if you were to say, hey, I'm going to buy a small piece of what I'm willing to commit at the open, regardless, I don't care. Go ahead and do it. Because what you would look to do is be looking to add on those retests. And a drop like this isn't going back up to the highs like in the next 2 days. It's just historically not going to happen. So what we would look for is some type of ideally bottoming process down here. It could look something like this. It could take on other forms. This is how we use bar by bar analysis. But with a drop like this, you know, technical trading 101 says look to short the retracement. Now, when we get retracements in this type of a scenario, what I do, and this is how I show you the strategies in the swing course or the MTS course. In a scenario like this, because we've got this giant void up here, for shorting purposes, let's just say it does retrace and it takes whatever, you know, a week and a half, whatever it might be. The M top is the highest probability short setup. The first retracement typically fails, or it doesn't go very far. And sometimes it actually will make a higher high. And that's a good setup too. It's just a little variation of the M. So that's what we would look for in the coming couple of weeks as far as a short setup goes, assuming some type of bottom is in place here, which makes sense based on what I've already said. So how that shapes up, whether it's this or whether, you know, it's a little retracement and it comes down and retests again, I would like that as well. So this is what we need to wait and see how that shapes up. As far as today goes, let's just clear this up. As far as today goes, as I said, that's at this resistance. We never buy at resistance, especially in a downtrend, right? And breakouts in an uptrend at resistance, that can work. Breakouts at resistance in a downtrend, low odds. Qs into the support level here. So you see, we look at support levels and we say, okay, what was support that it crashed through will be resistance. So that might be the area of a bounce where sellers will show up. We'll see. And, you know, we'll be looking at the intraday charts at that time to see if that lines up, because wide range bars and momentum moves in smaller time frames. So we look inside of them to see if there's some congestion up there. And at that area, 175-ish, is really little to nothing there. The significant areas up here, you know, around 178 to 180. That would be a giant bounce. Yeah, it would be unusual. Rather, what happens in a situation like this is resistance gets created. Well, sure, you know, just the speed at which prices moved into an area of support suggests capitulation. Wide range bars suggest that. It's just the bottoming process, just like this hourly chart took, you know, and this is encompassing overnight trading, took a whole bunch of hours. So just imagine this picture on the daily chart. And, you know, this is a typical retest type of a pattern. And just count the bars and say, okay, that would probably wind up being about 2 weeks or so of hanging down here and then looking for the bounce. Now, everything that we look at, whether it starts with an individual candle or a group of candles, it's applicable to all time frames. I've seen it, Alex. You know, if we go back to, I forget what year it was, maybe 2008. I don't remember exactly. I'd have to look at the chart. 1998 was the crash, the financial crash related to that hedge fund. But anyway, if we go back and look at the charts, and maybe we could do this, you know, in the latter part of the day, what you'll see is that the S&Ps made a V bottom and the Qs made a W. So is it possible? Of course. Not likely, but we have to assess that, you know, at the time. Russell just crashing, you know, to the downside here, and that kind of started it with its consolidation and relative weakness here. And then, you know, it just fell off. It fell off, you know, the cliff and crashed, and it's up against resistance here. So, you know, going long at the open is not a good idea with this pattern. The Qs do look better that they've cleared this resistance and consolidating above it, but they're not going to go it alone. Transports we looked at, and they're doing nothing here. Looking at the futures, you can see the initial start of the bounce, but at resistance. It's sideways at resistance, so that's acting bullishly on this time frame, but again, downtrend. Qs trending up, looking better. Some small area of resistance there. The Dow, which had made a new all-time high and just crashed from there. And it's like historical patterns don't do this. You know, they have some kind of retest. You know, so this move just came out of the blue, so to speak. You know, we talked about how interest rates went up on that Wednesday and the market just ignored it. And then last Thursday and Friday, the selling started and it just continued. All right. Bonds down a little bit today. All right. So this is what the media says started the move. But when this happened, the market yawned. And then the next 2 days, it started its move down. Oil still correcting. Maybe that gives a little legs to the transports here and the airlines that have been smashed. And gold looks like it's starting a move here. Wide range bar igniting out of a base after a long decline. So that's looking pretty interesting. We did get a gold stock yesterday, so we'll see how this plays out here. So far, just a little consolidation there. So I'll let Dan take it over and look at what's bouncing here. I do see on the list here some pretty good bounces going on, so we'll see.
All right. Hey, good morning, everyone. Yeah, and I also sent out a video to our subscribers just talking about the route and the the market sell-off route, talking about the volatility, our strategy. And yeah, I agree. I'm not swing long here at all. I have a 1 to 3 day approach. If this bullish gap holds, and so far so good. Yeah, the Qs look great. Spiders here consolidating. I got no interest in the IWM, and I said all that in the video. Talked about the volatility, our market internals giving us a green light yesterday. But I said, look, the green light just means go to the charts. And as soon as the charts give you a setup, go for it. And yes, I went in and I had sold some out of the money puts on the spiders that expired today. I sat through some pain yesterday. I'm in the IYT. But now I'm going to be looking to sell spider puts that expire today and Monday. I'll take weekend risk if we hold well, because volatility is still spiked. The implied volatility rank on the SPY closed at 98%. That's wonderful. VXX here. Remember we were looking at it in MT Live on Wednesday, and we wanted it to, jump out more. And we said, well, if we get another sell-off, then I think it will. And it did exactly that. Look on the weekly. It spiked up to this June high. So the internals are great. This is a here, let's blow this up and look at the spiders. Look, this sell-off. Well, actually, there was one in February, right? Yeah. We were cleaning up, selling out-of-money put spreads, shorting call spreads on the VXX. We did it again here. We did it again here. We did it again here. And now we've been waiting for this recipe since this July breakout. And I think we have it right now. It's just this pattern. I was also pounding on directional trades. This is not a directional setup. This is a short-term candy store trade that Alex labeled for us yesterday. of selling at the money, high volatility put spreads on quality pattern. Well, quality is a kind of a relative term with this shellacking, but uh, patterns that we have confidence in that we think they're going to hold for, for a few days. Yeah, Frank, implied volatility rank. All it does is it looks at the current volatility and it compares it to the prior year. And it says, hey, where are you now, volatility? And 98, it's 0 to 100. So that means 98% of the time over the last year, volatility in the SPY has been lower. Saying it the other way, only 2% of the times, and it would be during the times that I just showed you on those market sell-offs on the spiders, was it higher than today? So that's the candy store environment to sell puts. It doesn't mean go out there and sell away in reckless abandon. It means it's just put that on the sidelines. That's a great recipe. Now everything has to do with the compelling chart for the time frame selected. And I guarantee you will not be hearing Greg or I complaining, oh, there's no juice, there's no juice, there's no juice. On these market sell-offs, everything's juicy. That's why I'm calling them Alex's candy store. But again, not reckless abandon. We need our setups. We're going to be doing the same thing as we do every single day, watching in the first 15, 30, 60 minutes for our intraday setups. Okay, that's my very clear game plan today. So we're going to know here in the first hour if it sets up or not. Yesterday set up nice and it failed. But I like this. We're gapping up here. It's a shallow retracement pre-market. This will be a beautiful 30-minute high to sell put spreads today that expired today. So I think I've drilled that point enough. All right, so I didn't issue the official alert yesterday, but I'm short the 272.50 puts for today. Michael Jackson, Mike Juliet, we have a out of the money put spread, and he's weekend, but this is another trade for it expires next Friday, and it's still the 35s way the heck down here. But this is another trade. You say to yourself, wow, this thing went way against me and I'm still profitable. And of course, we've stopped out of a number of things this week over the last 7-day sell-off. But here's an example where we love saying it went against me and I still have an open profit. I wouldn't add to this. It's cracked. But we don't have a directional. We have a put spread. IYT, we shorted the 180 puts way the heck down here. And, we have I'm in it. I have an unrealized open loss. But it was the overcooked internals yesterday, which is why I decided to sit in the pain on this and the spiders. Orly, we have a call spread. I moved the stop. I just texted it to you all. Walmart, we have a put spread that expires today. So even in the market route, our stop was under here, and now it's gapping up. So we managed to survive that. PGR, we have a call spread. We covered half. Goro is our little stock that we went long yesterday with the strong gold sector. EXK, here's one Alex is watching. Yeah, looks good also. GE, we've been watching, nothing to do now. MA, so we have a put spread here. And once again, we have a nice open profit. The stop is under here, and even if we stop out, it's going to be at a profit. Vert, Alex gave us this one yesterday to watch, so I put it in my minder. NIO is this IPO that I said I'm going to watch. And you know what? Today might even be the day. Look at that. We got a 2-bar pullback, held the upper 75% of this bar. Now it's gapping up and it's holding. I'm going to put that in the minder. That looks great. Romeo Hotel was relative strength yesterday. It's in a downtrend, but I was looking at that as a put selling candidate, but it was just too spready. Let's look at a couple gappers here. This was one we never got filled. I wanted this put spread on this day, and it's up $3 and change. Still no pattern. Corey, 1250. Wow, that's gapping way the heck up here. That almost looks like a buyout. That was FDN. I typed these bank stocks. We have 2 minutes to go. All right, yeah, I'll look, Alex. Again, I mentioned in the video, any of these they're in nasty downtrends. But if you could sell a put spread today, then I'm open to that. On Goldman there, and this bank, look at it, Wells Fargo, this is just garbage. This is damaged goods. I have no interest in you. Look, PNC down $3. I pretty much said in the video, you got rocks in your head if you're long this stock. I got zero interest in that. JP Morgan, again, if it can take out a 30-minute high, a put spread that expires today. Otherwise, you know, there's so much damage that we're swimming upstream. City, same. Greg Square from yesterday, you know, it's just a watch. So here's XLF is up on those earnings. Cisco. Yeah, see, I did mention that things that I do like, the recipe that I want to take a directional is an oversold or otherwise bullish daily, but the weekly still being in an uptrend. So yes, Alex, that's the recipe I want. A bullish pattern on the daily, weekly in an uptrend. Facebook, it would be a day trade only for me. Apple, same. I mean, these are day trade. So you know, I'm not. There's no reason to rush now, of course. But Tesla, I don't even want to trade Tesla. We got to wait for these to set up. You cannot get caught up in this opening gap euphoria. Patience, my son. Who said that? What movie? Wow, look at that gap. Kung Fu. All right. Kung Fu. But say that, I mean, the spiders is one that it's still in an uptrend on the weekly and monthly. So yes, this is a pattern that I would want to sell put spreads on. And it's going sideways here, pre-market, at resistance. So this is perfect actually, because it makes my decision to stand aside and just watch, more confident.